Good afternoon, everyone. Thanks for having me today at the conference. And the last presentation was quite a good lead into what we'll be talking about over the next 30 minutes or so. And this is about how data will be needed to empower the real-world tokenization of any assets throughout the world. But before we get going, not everyone here, I think, has worked in finance, and much of you probably think, why is this guy from Bloomberg on here? It's a TV channel in my hotel room. So first, I'm going to give you a quick overview of who we are and how we help to provide some infrastructure into the financial system. So Bloomberg has two main divisions. We have our news division, which most people know and is in, like I said, in every hotel room around the world. And we also have our software division. The software division is the core of Bloomberg's product offering. It was founded over 40 years ago by, of course, Mike Bloomberg, who left the banking career in the early 80s with the goal of creating transparency in financial markets. So the first function on Bloomberg was actually the price of a US Treasury. So it goes back about 40 years, and we were one of the founding fintechs within the world, and have built the company up over time to provide a terminal that provides data and analytics, enterprise data, and trading systems, risk systems, a lot of the front to middle office architecture for the financial world. But Bloomberg is not only about having software and selling software and providing news. We're also about making an impact on the world and helping create a better sustainable future. So Mike actually himself was former chair of TCFD. So we have a core beliefs that we need to have an inclusive and diverse workplace while pushing the boundaries of innovation. They kind of fit with each other. Diversity, inclusion, create innovation, and help us push the boundaries. Furthermore, we're looking to solve problems and build communities. So Bloomberg Philanthropies is one of the largest donators in the world in terms of giving out to charitable organizations. People at Bloomberg donate thousands upon thousands of hours every year to help the communities that we have offices in. And on the back of that, we donate part of the money that comes into the company goes back into the communities where we are. And lastly, just to give you an idea of where we are, we have 21,000 employees in roughly 150 offices. Much of those offices are news bureaus. We have about, I would say, maybe 15 software sales offices. We have engineers sitting in London and New York, product managers sitting in London and New York, and sales representatives sitting all around the world. So I'm based in the Hong Kong office. And we also have an office here in Seoul, which has a news bureau, salespeople, and data. So what do I do at Bloomberg? Within Bloomberg, my role is called the Bloomberg Market Specialist. But you don't need to know what a market specialist is because it's kind of unique. There's a lot of unique things about working here. What I actually do is business development. So that's kind of why I was invited to the stage today, is that I run a team of 8 people in Hong Kong, and what we're really trying to do is think about how does Bloomberg stay relevant for the next, say, 2 to 3 years, or even beyond that. We work alongside product managers and engineers to develop new tools and products. One of the projects I've worked on in the past 4 years is integrating cryptocurrencies into the Bloomberg terminal. Before we started this project, we had basically Bitcoin streaming a price through the terminal and a Bitcoin index. Post that 3 to 4 year period, we have 50 tokens streaming through the terminal. We've added news reporters, 20-something independent research providers, and much more data that's more accessible to our clients. None of that, of course, happens without client demand, but our team helps to feed that client demand back into product. And now we'll get into the nuts and bolts of what we're here to talk about today, and that's how data is going to be one of the key things that's going to allow us to create real-world tokenization and propel the security token industry into the next stages. So data. Just so you all know, I was a banker before I was at Bloomberg for over 10 years. I was a user, so I was someone at the firm that maybe a Bloomberg account manager would come talk to. But I opened up my Excel every day. I had my own internal data lake that my company had that I could pull data from. I had Bloomberg DAPI. I could use FactSet or other great data providers, but I never used them because of course, I only use Bloomberg. But really, I had no idea, actually, to be honest, I had no idea where the data came from. 90% of what I did was in my own internal data lake, and we had our own thing. We had our own product that called DataBridge. I could have been pulling data from vendor Y, X, Z, Bloomberg, whatever. As a user, I didn't care, and I took for granted how difficult it is to manage data. But nothing without data starts without having, you could say, your security master data. And even in the real-world asset tokenization, we were just having this conversation back in the speaker room. You take for granted that even the company name is a piece of data. The company identifier is a piece of data. Whether you're a security token, and security tokens may cut down the amount of steps it takes to process a trade, but without a doubt, that trade is going to be touching on multiple systems throughout the trade lifecycle. Let's say you have a different security identifier in system A, and you have another security identifier in system B, but you want to reference the same company or the same security. How do you know what price to grab that references the right price that's going to mark your book to the correct mark, such that whether you're buying a security token or an equity, it flows through all of your systems correctly, and you have no breaks. So everything really starts with the core here, which is your reference data. Without reference data and a security master file, everything we're doing is useless. So for us, what we really try to provide clients is the most reliable, dependent enterprise market data that we can possibly do. And on the back of that, if we can do that every day and deliver that data reliably to clients, the clients will be able to rely on our systems to help run their own investment processes. And that could be through security tokens, TradFi, whatever. It doesn't matter. Without having reliable data delivered on time every day into your systems, then everything breaks. And I think we've seen that in the past. There's been multiple breaks within different data systems throughout time. And with that, the world becomes almost paralyzed. I mean, there was even a famous Bloomberg break when I was a broker, and we literally all looked at each other saying, do we all just go home? Because everything just stopped ticking. So without data, there really is nothing, and whether it's a security token or not. So what we're thinking about is how do we take this, we start with the security master data, but why is it so important? Because if you think about the web of data, and this looks like the Matrix, right? Like my eyes go a little bit squiggly when I look at this. But I think the point is don't worry about reading everything. The point is without having even the most trivial data, like the name of a company and the identifier of the security, having all this other data that is required to be in the security industry is irrelevant. So it all starts in the center with the security master, but then we get into, okay, if I have the right security, I can pull the right price. Is that price going to be at what time? What snap? How do I make sure it's uniform throughout systems? I was just having a conversation with an account manager today in the office, and they said, I have a client, and they have a system, and they say that their back office system doesn't tie to the Bloomberg system. And they say that they don't know what to do. So their PM is seeing one number, and the accountant is seeing another number. I said, the first thing you need to do is, for instance, say, what time did they snap Korean won? Right? What ticker are they pulling for the security? Are they pulling the right tickers into both systems, right? Really starting with the core basics of having reliable, dependable data that flows throughout all of your entire systems. From there, you can start getting different things, whether it's research data, regulatory data, or derived data. All of that starts with the right security master files and can leverage all these different systems. So this is something to think about as we create security tokens, because at first you think, oh, I just want to tokenize a US Treasury. It's not that simple. What Treasury? When was it issued? What descriptive data do you need? Or if it's a corporate credit, right? What's the call date? Was there a corporate action? Was there a default of the company? All of that stuff comes from data files that would feed into your systems that you need in order to run an effective security token platform. So a brief history on kind of how we deliver data at Bloomberg, and I think it's pretty relevant to most data providers in any industry. So about 24 years ago, I think we started actually letting clients leverage data throughout their own systems. So I was definitely not a client then. I was just graduating high school. But the way we deliver data is still a way that we deliver data today. We use SFTP and REST API. I mean, everyone knows SFTP. I used SFTP when I was 15 to build a website. So we use these two ways still today to deliver data to our clients. It's dependable, reliable, secure, right? But the world's grown. We become more cloud-based. And therefore, at Bloomberg, we've had to adapt to our clients' needs. And now we have our ability to deliver data through multiple platforms. So we have connections with Google Cloud, Microsoft Azure, AWS, and even Snowflake. So as our clients have moved from on-premise, which is relying mostly on these two old technologies, to in-cloud, Bloomberg has had to adopt to deliver its data to where our clients need it, when they need it, and what data they need. So how could Bloomberg data help to power real-world tokenization? So now we've gone through already the importance of having reliable, secure data. We've gone through the fact that it's not just that every piece of data is not trivial and everything is needed in order to run a proper, secure platform. We've gone through the delivery methodologies that we currently have on offer. And now we'll talk about how we're building out data sets and also delivery methods such that clients, hopefully in the future, if the world becomes more tokenized and clients demand it, will be able to deliver that data in the same reliable way going forward. So we'll go through this in kind of a problem statement and talk a bit about how we might solve that. I could have wrote in a lot smaller font. This is the biggest screen I've ever presented on. It's fantastic. Clients have mixed opinions and sensitivities towards crypto investments. They require a transparent and reliable way to identify exposures. What does that mean? For instance, in Hong Kong, funds can only hold up to 10% of cryptocurrencies if you're not deemed a crypto fund. So you're a hedge fund and you operate in Hong Kong, you can have 10% of your assets in crypto. So I need to have identifiers in my security master file to tell me if something's crypto. Or I'm a wealth manager. And some wealth managers, so I have a retail broker that I use in Hong Kong, doesn't let me buy crypto ETFs. Not because I don't want to, it's just because I haven't signed the paperwork yet because I have the paperwork signed with someone else. But on that one, they have to know if I'm going to put in an order for a ticker that's a crypto ETF. And to do that, they have to be able to identify which tickers around the world have crypto ETFs. So what we've done to help our clients, and this is not even, to them, it's the regulation would allow me to buy it. It's up to them that they haven't let me bought it yet. They just choose to be selective about clients and make them do extra hurdles. If you think about it, regulators are, in crypto at least, I think in most areas you think of regulators setting the maximum threshold or setting like this is the best, most conservative practice and you need to comply to it. If you think about digital assets, I think a lot of the regulators, what they're doing is setting actually the minimum threshold. So when I go speak to a private bank and they say, oh, the regulator is saying that we have to go through, that a client can do whatever they want in crypto as long as they say that they understand the risk, right? I've talked to a private bank, they go, we don't care. That's the minimum standard. Our standard is our clients can't hold more than 20% of digital assets or 10%. So in order to do that, they need to have the data that helps identify not only what is a digital asset, so is it a Bitcoin, but is it, say, a fund that can hold a digital asset? Some firms consider tokenized bonds digital assets. Some firms in Hong Kong now, they're not. But up until about 6 months ago, a tokenized bond was considered a digital asset, so it would count against that threshold. So what we've done here to help clients is created a rules-based approach going through descriptive data. So again, things that seem trivial because it's text, but it's not because it's giving us the descriptive stuff we need to identify what's the underlying of the product, as well as fund prospectuses to say this fund can invest in crypto. And we can deliver a data file to clients that help identify whether something has direct, indirect exposure or the ability to invest in crypto, and then give you the characteristics as to why. So this was originally built around a Hong Kong regulation that said that crypto was a complex product and can only be sold to professional investors. But actually, we found that it was very useful to clients beyond that because that was, again, the minimum threshold. So clients find it very useful to be able to identify what is potentially could have crypto exposure, is direct crypto exposure, and there are even some fund houses that they may or may not, didn't know, like at the time, there was no Bitcoin mining sector. But they're like, we don't want our PMs buying Bitcoin miners. So they want to put in a rule. So they can use something like this file to help put in that rule. Now, actually, at Bloomberg Industry Classifications, we've added crypto-specific industry classifications in June of this year. So you actually can use a sector now to identify if it's a Bitcoin miner. So the next problem is identify the direct and indirect exposure to digital assets across multiple asset classes. So this can mean two different things, right? So direct exposure to us would be you leverage crypto and distributed ledger to generate new units or verify transactions. So crypto, like Bitcoin, is direct, right? But Coinbase is not. because whether Bitcoin goes up or down, now there may be a correlation, but Coinbase actually would make the most money if Bitcoin went up and down because they're making money off volatility. So that's indirect exposure. So we take that last thing we just talked about and we take it a step further and help give clients, is this direct or indirect exposure to cryptocurrencies or digital assets? Now lastly is getting back to security tokens, is because we're able to go through the prospectuses of bonds and funds and all that, we can start to label bonds, which are the main STOs that we have in the institutional market at the moment. We're able to label them and make them searchable throughout the terminal. So if I go in the terminal and I say search for digital bonds, about 170 bonds that are both live and historical will come up, most of which are sitting on a blockchain. Some of which are used, like let's say MicroStrategy would be considered that as well because it's using the funds to go buy Bitcoin. So we would classify that as in the digital bond sphere. So because we do all this data scrubbing and manage this data and go through prospectuses and create these data files, we're able to actually create searchable data within the terminal that help our institutional clients, say, potentially identify what is a digital asset. So the next problem that we're going to talk about is as the OTC markets automate, people need reliable data. So what Bloomberg needs to do, and I think we just talked about how 24 years ago we only gave data through two technologies, being SFTP, REST API. We've then been able to evolve that into giving data over cloud through Amazon, Azure, Google, and Snowflake. Now the next step is what happens when our clients say, I need data on chain. And this doesn't mean your retail STO platform. It doesn't have to be. This can be your bank that wants to do interbank transactions and not have to hire a bunch of back office people or wants to save cost and creates a private blockchain. But then let's say I'm doing a interbank repo transaction. So I know not everyone's in finance. There's definitely tech people in here. A repo is I give you something and you give me cash because I need cash tonight, and I agree to buy it back tomorrow. That something might be, oftentimes is a US Treasury. What's the price of that Treasury? Well, you need to know the price of the Treasury because it's part of the record keeping, as well as I need to know what I lent out the Treasury at. I get the cash back. I can have the cash on my balance sheet. Tomorrow I'll buy it back. That's one example, and I think it was talked about earlier today, of where banks are moving things on blockchain. But you need a data source feeding in, say, the price of the Treasury, so that when they give the Treasury to the other branch of the bank, they know how much it's worth in an automated way. So how do we adopt Bloomberg data such that we can support something like that? And this is just one example of how we might be able to support it. So under development and research at the moment is a partnership that we have with Digital Asset and the Canton Network, where we're looking at how to provide Bloomberg data into blockchain through a third-party node. So we won't run the node. We'll be doing what we do for every other type of data delivery. It's just another technology to us. So if our clients demand it, we need to provide data on-chain. We can build the connectivity to provide it on-chain. And this is how it will happen. So I'm the DApp with a smart contract. And I've got my customer node sending requests back and forth. I need to know the price of, let's say, a stock or a US Treasury, right? I can send a request via API up to a data oracle that's going to be housed by a third party. So a company that would, it would be any company that potentially is already running nodes for different blockchains, and they're going to set one up. So it's not going to be Bloomberg. That will automatically send a signal up to Bloomberg's servers, to our cloud. It will then request the data from us. What will happen then is that, just like in any other delivery method, Bloomberg will then go to our files and instantaneously be able to say, this company down at the bottom is able to receive this data that they're requesting. So they're licensed, right? Then what will happen is we'll be able to send the data down, and you just follow the red line, and the requested data will be able to go to the smart contract. Now, how can this be used? In the first stage of development, this will be static data. Static data meaning that it's got a point, it's at a point in time or a snap, it's not running live. So when you pull up your retail broker app, you see prices ticking, that's real-time data. What this would be is like, let's say I'm a structured product. And in the structured product, I have a knockout at NVIDIA reported last night. So let's say if NVIDIA falls to 110, I lose my money. As long as NVIDIA stays above 110, I'm going to get paid some yield. Every day, this whole thing will happen at a certain time that's agreed upon in the smart contract, and the smart contract will be filled with NVIDIA's price. If it stays above 110, you'll get paid a yield. Hopefully, you get paid a yield in stablecoin because then everything's automated, right? But theoretically, it could be anything. But this is just a smart contract. So then, let's say NVIDIA goes down to breaks 110 at that given time of the day when it requests the data. Then what will happen is your money will get called. It'll go into your custodial wallet and pull the stablecoin collateral that you have out of it, right? But all of that's being done by the app, right? The only thing that we need to do is provide the price of NVIDIA every day. Now, on a single stock basis, you can run that yourself, or you can go onto finance.google and pull the price every day. But when you're talking about actual scalable business, you'll be making thousands of calls per day. Or you'll be making one call, but for thousands of securities. And this is what our clients are already doing every day through multiple different methodologies. So what we need to do is say, when the clients do move to a blockchain-based system, is be able to build the connectivity into the chain. So with that, that's the conclusion of the presentation. And I hope that what you get from it is that, one, data is not trivial. Even the name of a company is something that's very important. The company identifier, without having unified data sitting throughout your systems become broken very easily. Two, data needs to be reliable and delivered to where clients need it, when they need it, and what they need. And so at Bloomberg, we've been able to provide that throughout the past 20-something years through the REST API, SFTP, cloud-based systems, and in the future, hopefully, be able to deliver it to blockchain. And three, that in the end, that's all this is a new technology. So actually, the needs are the same as the traditional world, but it's going to be a new technology that, yes, in the end, will hopefully create more efficiencies in back office processes, more efficiencies and more openings for people to invest in new assets because it'll become less costly. But in the end, without reliable data delivered where you need it, when you need it, how you need it, this system will not be able to function, but it's definitely doable, and hopefully, we'll see more security tokens in the future. So thank you very much.